"2025 marked a new record for investment in space infrastructure, with investment reaching $22.2 billion, according to Space Capital, which beat the previous record of 2021. This week on Orbit, we're joined by Chad Anderson, CEO and founder of Space Capital, who's been cataloging the changes in space investment for years. Chad joins On Orbit to share his takeaways from 2025 from Space Capital's recent Space Investment Quarterly Report. He says record levels of investment in 2025 show the market has transitioned from skepticism to industrial maturity. Chad also shares some of the trends driving momentum for the year ahead, like the convergence of geospatial intelligence and AI, and his thoughts on a SpaceX IPO for 2026. I'm Rachel Jewett, and you're listening to On Orbit, the podcast that asks, what's our future in space? Hi, Chad. Thanks for joining me on Orbit today. How are you?
Good. Happy to be here.
So, Chad, you are a longtime space investor and expert, and you've been in so many via satellite stories. I was searching before this episode, but this is actually the first time we've had you on the podcast. So excited to talk with you today.
Yeah, likewise. I'm excited to be here.
So, Space Capital, you recently released the fourth quarter Space IQ for 2025. So I thought this would be a good time to talk about what we saw last year and some predictions for 2026. And we've already seen some interesting space investment news so far this year. So to kick us off, just what were some of your top line takeaways from the space investment landscape in 2025?
Yeah, 2025 was a watershed year for the space economy. There was $55 billion invested across 431 companies, which set a new record and actually surpassed 2021, which was the previous peak. So, the key takeaways are that we have transitioned from a skepticism phase to a period that is more industrial maturity and proven utility. There's a few developments to happen that really sort of underscore this, which is Blue Origin, their New Glenn booster. We put this on the cover of the report. Their landing introduced much needed competition into heavy lift launch capability, right? There's no longer just really one game in town. We have more competition coming online, which is great. Europe's Frankenstein Project Bromo, the roll up of all their defense contractors. That was a key moment for me. I think that consolidation really signals that legacy aerospace is acknowledging that they can't compete with vertically integrated commercial players. And then also there was $25 billion in a massive surge into geospatial intelligence applications, which demonstrates that AI and space are converging around world models and physical AI, systems that need space-based data to understand and predict the physical world. The market has moved from, building infrastructure to deploying it at a scale.
Yeah, when you say skepticism, can you just talk a little bit more what you mean by that and that transition?
Sure. Yeah. I mean, for years, skeptics have questioned whether the commercial space economy could sustain itself beyond commercial contracts and whether the infrastructure being built would generate real economic returns. And I think that debate is now settled. And one of the reasons for that is because Q4 was a massive quarter in a massive year for space investment and space companies, but the U.S. government was shut down for half of that quarter. The Great Freeze, this was a historic 45-day U.S. government shutdown, and the commercial space sector didn't just survive; it accelerated. There was $17 billion invested in Q4 alone. And some of my favorite sort of snippets from our write-up in the report is that we're no longer just building the rails, we're now running the trains. I mean, the proof points are everywhere. There's closing in on 10 million Starlink subscribers, generating telecom style, scale revenue. We've got geospatial intelligence investments surging to $30 billion annually as companies feed their proprietary data sets into AI models. Capital markets have repriced the sector accordingly, and we've really moved to a place where we've got industrial capital backing companies with proven unit economics and repeatable demand.
Yeah. And just the for listeners that might not be familiar with the way space capital tracks things, you guys also look at so space infrastructure is like satellites launch, and then you also look at I think you call it distribution and applications.
Yeah.
Okay, and so that's on applications, that's companies that are making money off of like that could be GPS. It's enabled by space capabilities. Is that right?
Yeah, this framework comes from our seminal thesis paper, the GPS playbook. I mean,
Mhm.
so early on, trying to think about how big this opportunity set is, right? Like space is not just commercial space stations, the Apollo moon landings. This is space technologies are the invisible backbone that powers the global economy, right? So trying to come up with frameworks to help people get their heads around how big this opportunity is. So in the GPS playbook, we looked at GPS. It's a space technology has generated trillions of dollars in economic value, some of the largest venture returns the world has ever seen. Like, how did that happen? Um, it had to go from being a niche government military capability that was off limits to anyone else by design to being ubiquitous in everything across consumer and enterprise and government. And yeah, so the infrastructure is the satellites that are on orbit. Most people think about space, um, which was pretty useless until Trimble developed commercial GPS receivers in the early 80s, which allowed you to tap into this really valuable signal from orbit and use this positioning data to then applications companies, software developers in San Francisco and other places could buy one of these commercial GPS receivers, tap into this really valuable positioning data, and then build software applications for end users and markets. And so it's not just like if you only focus on the space infrastructure, the opportunity from an investment perspective is very limited and not that exciting. But when you think about the infrastructure and how that infrastructure is being used, that's when it starts to get really interesting.
I also noticed as I was looking through that, like satellite terminals, some of those businesses are, those that's a very important part of the ecosystem, but it's not exactly in that. It's not the space infrastructure, but it's such a critical part of how services from space are distributed.
100%. And that's why, in our data that's in the report and also our interactive data that's online is we make it easy for people to select so despite us believing this and like us having a thesis and having a bunch of research out there that explains all of this, some people are still want to look at it through a more sort of focused lens. And if that's the case, you can slice the data by infrastructure or, if you want to think about it in terms of like what most people think of space companies, you combine the infrastructure and the distribution, and that'll give you sort of like your upstream space
Mhm.
capability, and then the applications is really the software.
Yeah. So in the space infrastructure, I did pull out that segment, and that was still seeing record in 2025 of 22.2 billion, and the report says that's up 30% from 2021. So, um, talk us through what were some of the factors that reached that peak investment in that category?
Yeah, there were a handful of factors that drove this historic funding. First, I think defense demand established a permanent floor for investment. So the Golden Dome missile defense architecture has created a sustained pull for tracking and connectivity and orbital resilience capabilities. A lot of valuations in the private markets and public markets are propped up by Golden Dome, potential Golden Dome contracts. Second, there was mega round activity, reached 39 deals. Capital was concentrating among proven players, leaders in satellite manufacturing and medium launch who have demonstrated execution. And then Blue Origin's New Glenn success fundamentally expanded market capacity and access, which has reduced the single point of failure that had constrained the sector previously. And then software innovation is accelerating hardware development cycles. So we're seeing companies use advanced tooling and AI to iterate faster, reduce capital intensity, and time to orbit. And so yeah, so we're seeing AI not just impacting the software and the application side of the equation, but also is bolstering infrastructure development. And notably, this record fundraising happened without even the large SpaceX round. They were raising capital, but they were much smaller rounds, really to facilitate their employee tenders in their marketplace. So that, for me, really underscores the depth of the capital that's available for world-class teams that are solving hard problems.
Yeah, that is interesting. What does it take to be classified as a mega round?
100 million plus.
Okay. And then how did you see the balance of, you mentioned there were some more mega rounds. What about the balance of like more early stage investing? We're still seeing investment there.
Yeah. Well, so there was definitely a flight to quality. So growth stage activity surpassed the 2021 peak, but there was a crucial difference. Capital was concentrated into perceived category leaders that have demonstrated clear technical differentiation and a pathway to scale. So 39 mega rounds, which is nearly double recent averages. And that, I think, indicates that investors are identifying and backing winners earlier. Average round sizes have climbed across all stages. Seed rounds are up 60% to 15 million, which is the largest increase. Series A rounds are up 50%. Series B is up, and C is up 25%, 15% respectively. So this isn't like indiscriminate capital deployment. This is
Right.
conviction flowing into companies that are solving first order problems in like spacecraft platforms, reusable launch, persistent synthetic aperture radar. The early stage of the funnel is still strong. There's record deal count there, but late stage is increasingly binary. So companies with strong execution and defensible tech are getting outsized rounds, raising these large mega rounds, while others are really facing a challenging environment, which I think all that bifurcation is healthy. It's creating discipline and rewarding the teams that deliver.
Yeah, that it's more focused capital, not just investing in space because it's space and it's cool. It's investing in more proven solutions.
That's exactly right. Yep.
I wanted to ask about the emerging industries in space infrastructure. So, some businesses that aren't focused on like building and launching satellites. What types of companies fall into this category, and what did you guys see in 2025 with investment in these types of companies?
Yeah. So emerging industries is a subset of infrastructure, and it encompasses four industries beyond traditional launch and satellites. So this includes new nascent markets, space stations, logistics, which we define as space situational awareness and on-orbit servicing, lunar, so that's transportation, construction, anything to do with cislunar space, and industrials, which is really like manufacturing and assembly, mining and minerals. And so these are all new markets that are starting to emerge as new super heavy lift capability is coming online. And these four industries have collectively attracted $6 billion over the last 3 years and $11 billion since 2009, which we use that as an important milestone because that's when SpaceX launched their first customer, right? So,
Okay.
so this is represents all of that represents 23% of infrastructure rounds, despite being nascent categories. So that's a bit of the lay of the land. And then kind of like thinking about 2025 and the big takeaway, these industries are really transitioning from science fiction and science projects to commercial ventures. The logistics in particular posted record $1 billion of capital with companies like Impulse Space scaling in-space mobility solutions. Industrials saw its highest deal count, led by Antares. They raised almost $100 million in a Series B for transportable nuclear reactors, which are addressing power bottlenecks for defense and space applications. And then sort of geographically, the U.S. dominates in emerging industries. There's accounts for 78% of the capital, but we're seeing meaningful activity emerge in India and Japan, notably.
Right.
So these come like as these are categories are starting to grow and evolve, we're starting to see growth stage investment also. So Series B rounds surged 7x in 2024 and remained elevated last year. And I think as super heavy launch from Starship and Blue Origin's new larger version of their vehicle, come online, we're going to see more capital accelerate into these verticals.
It has been interesting in the past few years to see some of these companies hitting milestones like Varda's doing capsules regularly now. It's neat to see this part of the market developing.
Yep.
Okay, you mentioned AI earlier, and I want to follow up on that. So, how do you see it impacting across the sector? Do you you do see it impacting space infrastructure or more so in the distribution and applications areas?
Yeah. So everything. AI is definitely it's having a huge impact on hardware engineering and so space infrastructure companies. We talked about that a little bit, but AI's impact was actually most dramatic in applications and distribution. So this is, I think, really fundamentally reframing how investors value space-based data. So again, geospatial intelligence investment hit $30 billion last year. That's the largest single year surge in the sector's history. You the market is realizing that you can't build comprehensive AI models of the physical world without space-based observation. So we are witnessing the convergence of space and AI around world models, which are capable of predictive reasoning about Earth systems. Things are starting to get really, really interesting with all of this data coming off of Earth observation remote sensing systems. And then in distribution, this really manifested as investment in spatial computing. So there's several, very large mega rounds that happen in the quarter, all building foundational models that require space-based inputs. So these companies aren't just processing satellite imagery; they're creating the connective tissue between orbital infrastructure and AI applications. And then in applications, physical intelligence, they raised a large $600 million Series B, exemplifies how space-enabled data like GPS and geospatial intelligence is powering the next generation of embodied AI and autonomous systems. So this is a huge area of opportunity, I think, for us, and one that we're really focused on at Space Capital. The thesis is that AI systems move from pure language models and LLMs to understanding and acting in physical space, and they become dependent on global, persistent, and high-resolution sensing that only space-based platforms provide. So this is a compounding flywheel where better AI drives better, better demand for space data, which generates more training data, which improves AI capabilities. And so we're really still in the early innings of this, but
Yeah.
it's definitely an area of focus for us.
Yeah. I noticed in Tomorrow IO announced a new constellation last week, and they mentioned collecting more and differentiated data for AI models that current weather satellites are not able to collect. So I am kind of noticing that show up in the strategies right now.
We're going to hear that more and more, I think.
Yeah. Would you say, did anything surprise you about 2025?
Yeah, sure. So a couple of things at least. So there is, on the positive side, really kind of the sheer resilience and acceleration that happened during the Great Freeze when the government was shut down for half the quarter. I think that was a really big signal, that the commercial space sector posted its strongest quarter while the FAA was operating on skeleton crews and the government was functioning. Really, it was paralyzed. There was a complete decoupling of bureaucratic dependencies that have historically defined aerospace. So commercial operators, they adapted. They shifted to overnight launch windows to reduce the strain on air traffic control. Capital kept flowing. So this was, a lot of resilience and proof that the commercial sector has achieved, self-sustaining momentum. Again, really silencing the skeptics, I think. And then the other one, surprise, is probably structural. So really, it's how quickly geospatial intelligence surpassed GPS in round share with applications, because GPS dominated for over a decade at more than 70% of applications rounds. Really, location-based services companies. But GeoInt claimed the lead in 2024 and extended it last year, accounting for the most deal activity. And so we expected this, but I think the speed at which it happened was the surprise. And it signals that, AI-based open source models and the proliferation of satellite connectivity are unlocking new applications faster than anyone anticipated. GPS, the growth depends on breakthroughs in accuracy and coverage and resilience. Those things remain further out. There's a lot more infrastructure that needs to be put up in order to enable all that. And so the speed of this rotation suggests that, applications will look radically different in 3 to 5 years than I think conventional wisdom expects.
Okay. Interesting. And you're also looking at consolidation. So the report mentioned that there was record activity in the fourth quarter. What's driving that consolidation? And do you think that will accelerate even more this year or not?
Yeah, so 28 acquisitions in the quarter, which is tied the record. It brought 2025's total to 91 deals, which is the second highest year ever for M&A activity. I think this is being driven by a few different forces. So first, there's a prolonged market dislocation, which is straining weaker companies, creating opportunities for larger firms to acquire supply chain capabilities, technical differentiation, and top talent at rational valuations. So I think it's really attractive for larger firms that are well capitalized. We saw this, like, for example, IonQ made 4 strategic acquisitions last year to broaden its quantum communications offering, right? So companies that have gone on the public markets and have done well and have liquid stock that they can use for acquisitions. I think that there's actually probably more of that coming. So also the flight to quality means that capital is concentrating in category leaders who are using M&A to accelerate rather than build. Buy versus build, and especially in fragmented sectors like satellite manufacturing, where companies are rolling up capabilities and verticalizing. And then the IPO window has been closed for so long that it's made strategic M&A, the primary liquidity path. And acquirers recognize they can't compete with vertically integrated commercial players. Like, again, Europe's Project Bromo is the ultimate admission of this reality. So, I think we expect consolidation to accelerate in 2026. The IPO pipeline is healthy, which suggests that some companies will choose public listings over acquisition. I think we're going to see a lot more of that next year. But I think the vast majority of late-stage companies will face binary outcomes where they need to find a strategic acquirer or really struggle to raise down rounds in an increasingly selective capital environment.
Okay. We already saw our first space IPO of the year with York Space Systems last week.
Yeah, which we were a part of, which is fun.
Awesome. Congratulations. All right. So talk to me a little bit about what you're expecting to see in 2026.
Okay. So we put out some predictions. I think probably maybe hit on a few of the more interesting ones. So first, I think the SpaceX IPO is going to be the Netscape moment for deep tech. And I think that analogy holds because the Netscape moment was when the internet went from being, this niche capability that only like a small group of early adopters were using, to it being mainstream and really striking a nerve and everyone using the internet. And so I think that that's where we're at with space and deep tech. SpaceX is talking about going public later this year they'll have over 10 million Starlink subscribers. They're going to have a direct to cell roadmap that is really eating into a lot of global telecom revenue, which is massive. They have, talking about orbital data centers, they have transcended aerospace to become a communications infrastructure company. And I think that that IPO is going to force a sector-wide repricing. It's going to validate space as a scalable asset class, and it's going to provide a lot of liquidity that institutional investors have been waiting for. I think it's already starting to reprice a lot of you can see all the publicly listed companies really going on a tear after the news broke. So I also think that this is going to trigger a wave of new listings that are looking to, draft behind the giant. So that's probably the big one. And
yeah, so on that, so that was something I was curious about if you think it will drive more IPOs. So that's interesting to hear your perspective on that.
Yeah, because again, we've been banging the drum for over a decade, right? Talking about how GPS it provides a framework for how to think about space as innovation on a global scale, right? That this is way more than just the Apollo moon landings and the International Space Station. This is the invisible backbone of the world's largest industries today. That's what space technology is, right? Well, we can say that all we want, and that resonates with some people, but for some people, they're just stuck in their own heads, right? And it's hard for them to see, to widen the aperture and see broader than that. But with SpaceX going public as being potentially one of the most valuable companies in the world, it's really hard to not make that case or understand that case now. That is clearly not a niche opportunity. This is much, much broader than that. So, okay. So AI energy crisis looks upward. Terrestrial grids are straining under exponential compute demands from AI. Microsoft, Amazon, Google, Relativity, OpenAI, everyone is the Earth's running out of clean, accessible capacity, and there's a lot of people looking upwards to orbital data centers. I think that we're going to see a lot of hype around this in 2026. It's really a matter of timing. It's probably inevitable that this happens. There are some real engineering challenges that need to be solved. And investors really need to think through that, right? The immediate opportunity, I think, here isn't really putting servers in orbit. It's using space-based assets to manage and optimize terrestrial energy grids that are already being pushed to their breaking points. And we're starting to see that, right? With Blue Origin's announcement of their industrial grade connectivity constellation, right? I mean, this is really purpose built for hyperscalers to connect data centers. And, that is a really interesting immediate opportunity. Yeah.
Yeah, I think hype is one of the biggest questions around this orbital data center concept right now because everyone's talking about it. But like you said, there's a lot of engineering. I mean, I'm not an engineer, but I'm aware there are a lot of challenges to be worked through. So, but it's an interesting concept.
Yeah, it's more difficult than just data centers hot, space cold, but they are probably solvable. And then I'd say probably the third thing that I'm looking forward to and that we expect to see is that Golden Dome continues to drive a lot of demand for capability, primarily maneuverability. I think that that maneuverability is the currency going forward. The U.S. government and the U.S. Space Force is no longer interested in sitting duck satellites. You need capability to move for offensive and defensive capability. Um, so I think that's also dynamic, responsive assets
Yeah.
are the new requirement, and that's going to be a big boon for Impulse Space and other companies like that.
What did you think of the news this week of the merger of SpaceX acquiring XAI?
Yeah, I thought many things. What It's clear that the Elon Musk empire is converging around his AI ambitions, right? So there is a clear demand, like he's creating the demand for orbital data centers, and he has the supply to meet that demand. Um, and yeah, I mean, look, it's allowing SpaceX to tap into the mother of all narratives, which is um, uh, AI. That orbital data centers. There's a real argument to be made that doing data centers on Earth is constrained, and doing them in space makes a lot of sense. There's a lot of dynamics happening that could change that equation in the time that it takes to put those things up. But at the same time, again, SpaceX has already laid the rails, right? It's really about like running the trains. And so I think, you can do things on timescales that didn't make sense previously. So maybe they can outrun those variables. I don't know, but it's clear that AI is the basket that he's putting all of his assets in.
Okay. I know just for me as a journalist, I will be very interested with the SpaceX IPO because we're finally going to see more information about the company. Seeing
Yeah.
an S1 or quarterly reports from SpaceX, I think journalists, investors, going to be really exciting to get more information there.
Yeah. They've been private for so long, and there's a lot of information out there about a private company because it's so valuable and so interesting, and so many people are poking around and digging and trying to find out information. So as a private company, I think they kept the lid on things for a long time, and it's really after a certain amount of time and after you get to a certain size, it's really hard to keep the lid on things. So
Awesome. Well, really appreciate catching up with you and
yeah,
getting your take on 2025 and looking at 2026. For a wrap-up question, I wanted to ask something a little more, a little different than what we've been chatting about.
okay.
So, as an investor in many space companies, what do you look for when deciding if a company is one that Space Capital will invest in or not?
Yeah. So we have a kind of a unique way of looking at the world, I think. We're investing at the intersection of space technology and global markets, which means that we are looking for companies that leverage space-based infrastructure to solve big, tangible problems here on Earth. Like, we're not looking for science projects really, or satellite constellations that lack clear demand signals. And so first, there's probably a few things. So first, we look for technical differentiation. So something that is sufficiently compelling that it creates a durable moat, and it's important to understand market dynamics and evolution of technology to make sure that you don't get leapfrogged, which there's so much happening here so fast that that's happening on a pretty regular basis. So you want to try and avoid that. Um, we also look for a team that has a track record of execution and industry, domain expertise. Space is unforgiving, particularly in infrastructure. Hardware cycles are long, capital risks, requirements, risks are high, technical risk. So we back founders who have experience, who are building rockets, operating systems, building, bringing their operational expertise to adjacent sectors like defense, autonomy,
Hmm.
enterprise SaaS. So we look for teams that understand how to navigate both commercial and government markets. That's an important piece. Companies that win in space typically have diversified revenue streams that don't depend on one customer. And then we also assess market timing and catalysts. So the space economy moves in waves, big waves, driven by infrastructure deployment. So GPS is a great example. It unlocked trillions in economic value, not when the satellites launched, but when the distribution and applications scaled decades later. Mm-hmm. And we look for companies that are positioned to ride secular tailwinds. The build out of low Earth orbit constellations create demand for launch and logistics. The proliferation of Earth observation data is fueling GeoInt and AI applications. The emergence of cislunar infrastructure as geopolitical competition intensifies is an interesting area. So we ask whether the technology is mature enough to deploy at scale, whether customer demand is, proven or speculative, and whether the regulatory environment enables or constrains growth.
Some very important considerations. Well, it's been great to talk with you. There's so much exciting stuff happening in the space industry. Chad, thanks so much for joining.
Thanks for having me, Rachel.